What's up, guys? Court Currency here, and I'm here to show you guys how I scout the move for the trading session. Okay, I trade NQ, and if you like me and trade any of the indices or any of the stocks on the Nasdaq, you know, I like to stick to New York session. All right, not that you don't have some volatility during London, but the main volatility you have is New York session, most definitely. But to do that, my whole plan starts with marking out Asian session. All right. So what we have here in this yellow box, I always mark out Asian session, which starts 6 p.m. Eastern time to midnight. All right. So today's Tuesday the 20th. Yesterday was President's Day, and here maybe because we didn't have any activity for President's Day, being it was a holiday, um, you had uncharacteristic, good move for Asian session. All right. Now, I don't advise, trading this, but you guys do what you want. But here you had a 120 pip move. All right. But I bring you the Asian session because what I usually look for in this session is because it trades between a highs and lows. Okay. You probably have some good double tops and double bottoms here. You'll have a good amount of resting liquidity at those highs and lows. So because of that, institutions usually use those to hunt the stops, or as you may know, grab liquidity in order for them to get into trades. All right, so it is a zero sum game. So any trader, you need, just like you or myself, in order to get into a sell, I need to buy it from someone, or if I need to get into a buy, I need someone selling it to me. Okay, so this is the move that I would usually look for. So in no particular direction, but if I'm looking for a sell, I will look for, price to come up here first. This would be the drawing liquidity. Because price came up here, you stopped out sellers, or you triggered buyers to get into the market, not for institutions to be malicious, but just to get into their contracts. And once they get into their contracts, you usually see an impulsive move in that direction, signifying that they got into their contracts, and all their money's in, and then the money moves the market. All right, that's what we would usually have. Okay, but you know, like I said, I'm not trading London session. I'm just seeing what price is doing for the day, and Asian session starts the trading day. Okay, so what we did have in this London session, price didn't come all the way up because it was far, and you did have this uncharacteristic good move for Asian session. It just came up to the POC. What the POC is, the point of control on the volume profile, also known as the most volume for the day at a certain price point. This is where that the main volume of the day was at that particular point. It came up to it and then went down for a bearish move for London session. Okay, then it started to consolidate for the beginning of New York, and then for the 9:30 candle, you see price. What it often does, price, even though it's going in the direction that it already wants, you got institutions that want to get into the trade. So what do? Push the market up to grab liquidity. Right here, they get the liquidity they need for this area here, and then shoot the market down. Now, now of course you need a destination. Now, just like they need to shoot for liquidity to get into their contracts, they aim towards liquidity to get out of it, all in the same. So you're looking for liquidity for the origin and liquidity for your target. All right, so if we zoom out, you see that the previous week, Tuesday the 13th, all right, the afternoon, this was the low. So we were aiming at this low. This is why my target was right here. Now, when you get out of these trades, especially a good move, 89-point move as I trade futures, um, when you get out of this move, say you're completely out, you don't get back into a trade, all right, for a sell, or you don't get back into a trade for a buy just because it hit your target. You get out because that was the move for the day, all right. And the reason you do this, and is especially for certain times like maybe you trade London is a volatile time, and New York session is a volatile time. But once they go for their move, that's the move for the day. It doesn't, you know, it's not a lot of volatility after that. As you'll see after the move, you have a lot of consolidation, basically up until London the next morning. Okay, okay. Now, just the only indicators that you'll see here is the volume profile you see over there and the volume right here, because what I'm looking at once I depict the origin, which is the drawing liquidity, I look for to see what price does. I don't just jump right into the trade as you see here. I'll wait to see what price does. And what price did this morning was, you know, it on the 1 minute chart, you'll see an impulsive move to the downside, signifying that they got into the contracts that they needed. All right. And you won't always have what I call the silver bullet, a retest of that area, or price would make a fair value gap from the impulsive move and then dip back into that. It moved pretty quick. When once price break structure, it was safe for me to get in. But along with that move of displacement, I saw on in the volume here, I saw a lot of bearish volume coming in on the market. And I also trade with the footprint. Okay, the footprint is a order flow tool that you can buy on Sierra charts or Ninja Trader. It shows you on each candle, not only you'll see momentum with with the candles getting bigger, but you'll see how many buyers, how much more buyers or sellers are getting into the market, and it also depicts that by the delta, negative or positive delta. All right, so that's how I depict the move from the market, how I see the origin, and also my targets, and how I get in and out of the trades on a daily basis in the market. If you have any questions, um, I'm Court Currency on TikTok and Court Currency as well on YouTube. Hit me up with any questions in the comments, and I see you guys tomorrow.